Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for September 14th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We've had our impulse key range now set. For the most part, we had a major sell-off, obviously, that began last Thursday, culminated with a low Monday overnight morning, and then price responded and rallied and bounced right back into the midpoint of 2144.75. And that's exactly what we're looking for, right? Monday pre-market, we had our idea that if we can get back above the previous close here, that we could be looking for a move back toward 2144 to seal that range. Now what we have is a very clear key range from 2189 quarter, 2100 quarter, and then you have the midpoint at 2144.75. That's very, very important key levels there to watch now. As we head out throughout the rest of the week and perhaps the rest of the month. So this is going to be a very important key range. Right now we have not much in the way of economic reports today, but Thursday and Friday we have a ton coming out before the market even opens. So it's going to be heavy with a lot of reports coming out over the last portion of the week. That could maintain a little bit more volatility in the market. But right now, again, after so much volatility here, at some point you would think that there would be some digestion that occurs before the next move. Right now, not a whole lot to really do at the moment. We had the idea that we could get a bounce back up, but that's a reactionary move. Now we have to reassess what's going on, because we could have just seen the expansion and the widening out of a larger trading range, and now we could do business within this range. So there's a lot of different scenarios. Right now there's not something that's super clear, but I would say 2120 is that major level. So 2120, that's the level to watch. That's the over-under as we head into the rest of the week. All right, let's take a look at the intraday time frame. Here's the intraday. Very, very quiet intraday today for the ES. As a matter of fact, the ES right now trading only a third of its average daily range. About 8.5 points right now of range. It's been averaging about 26 points per day over the last 10 sessions, which is big. Very, very big. As a matter of fact, over the last 5 sessions, it's averaging 35 points per day. So this is a very, very small range compared to what we've seen here over the last week. But we could continue to see a fade the edges type of development throughout the session, which means look to fade new highs and look to fade new lows until we break out from this trading range. Okay, let's take a look now at crude oil. Here's crude oil. This one again continues to develop within the larger triangle pattern that we've marked out, and that's very important. I mentioned before that we could continue to chop back and forth within the apex of this pattern around composite and micro composite VPOC before we see resolution outside of this range. And so right now, I think coming down into 44s or the previous week's low here around 43, what is that, 43.80s, that's going to be important, 43.85, because if price comes down into this zone and can't get any lower, I think we snap right back up and we play back toward 47s. So keep that in mind right now. Below 44s could be a buying opportunity. If we take a look at the intraday time frame, here it is. You can see prices have made a push downward. They attempted to hold above the previous session's close throughout most of the overnight trade, and then here early pre-market we've seen things sell off a little bit. Again, if this thing pushes down toward the previous week's low price of 43.84s, that could be about the time where we see this thing reverse back up. So we could be looking at a little bit more downside price activity right now. In crude, we have targets along the way down toward 43.84. Once we get to that zone, it could be a fade back up toward 45 and perhaps as high as 47s. Here's a look at gold. Gold futures obviously has been trading within its large trading range. We recently had a very nice move off of 1306 up to 57.40. Then price was failing to hold above 52, so we were calling for a move back toward 30 to 34. We got that. And now the expectation is that, we kind of hold off. We probably go down a little bit more. And when price comes into 1306, that could be another opportunity to defend as a bull. Any failure to hold prices above 1306 doesn't necessarily mean this thing fails big time. the last line of defense will be 1290. So if there's a failure to hold 1290, then you likely see a major rotation back into 1250 and perhaps all the way as low as 1208. So right now, that's kind of the target zone or support zone. I still believe that 1306 is still the best area to defend as a bull. But failing to hold that level doesn't mean it's over. But failing to hold 1290 probably does. All right, let's take a look now at the NQ. Here's a daily time frame of the NQ right now. Again, very similar to the ES. We had a high here at 48.39.5, sold off significantly in the 46.25 quarter. Prices bounced back into the midpoint of that range, and that's exactly where we are right now, and that's 47.32s. So 47.32 is the midpoint of the range. We have an inside day that played out yesterday. We have a double inside day that's playing out today so far. After this major movement here, it likely implies that we could see a little bit of digestion before we see the next move. The fact that we're sitting right around the midpoint of this key range here implies that there's still, it could go either way from here. Very similar to what I mentioned with the ES, we have the summer trading range here. This move could open up that trading range, and now we could do business in here instead of just here. So it's widening of the range by 2 times so that we can facilitate trade for this new volatility environment as we head into the rest of the fall. So that's something to keep in mind as well. Now if we drop down into the lower time frame, very, very tightly coiled price action right now, trading just 36% of its average daily range, been averaging about 62 points per day on a 10-day basis, 83 points on a 5-day basis. So right now it's only 22-point range. That means we could see more today, but very similar to the ES, we have a trading range that is developed. The best idea right now is to fade new highs and to fade new lows until proven otherwise, as this thing builds out a wider range for digestion. All right, that's it for now as we head into the rest of the day. We'll see how this thing turns out. Good luck and trade well.